Good afternoon, everyone. Welcome to our interactive webinar on the Pradhan Mantri Viksit Bharat Rozgar Yojana. This flagship initiative of the Government of India aims to accelerate formal job creation, incentivize employers, and extend benefit to employees across industry at large. In today's session, we will walk you through the scheme's objective, eligibility criteria, and highlighting what it means for the organizations and their workforce. We look forward to an engaging and informative discussion this afternoon. We are privileged to be joined by representatives from the government and subject matter experts from Grant Thornton who will be sharing their practical insights and guidance. Our first guest speaker from the government side of it is Mr. DPS Kharbanda. He is an IAS, former secretary cum CEO, investment promotion, director of industries and commerce, Government of Punjab, 2007 batch, Punjab Cadre Office. Mr. Kharbanda has been instrumental in streamlining investment facilitation, spearheading ease of doing business reforms, and resolving long-pending industry cases across the state. His leadership in the Punjab Bureau of Investment Promotion and Department of Industries and Commerce has catalyzed industrial growth and investment in the state of Punjab. We will be keen to listen to his opening remark centered around leveraging the scheme to promote industrial growth and investment promotion in states. Thanks, Mr. Kharbanda, to accept our invitation. Let me introduce our another guest of honor from government, Ms. Richa Sharma, who's director of the director at the Ministry of Labour and Employment, Government of India. Ms. Sharma is a distinguished civil servant with over 22 years of experience, combining extensive experience in labor administration, wage policy, and social security with a proven record of public administration and policy reform. In her current role, she provides strategic leadership in designing and implementing national labor and social protection initiatives. Most probably, she has been one of the core members behind the drafting of the scheme. It is an honor to have her with us today to share insights on this transformation scheme and the detailed guidelines issued in this regard. Thanks, Ms. Richa Sharma, to accept our invitation. We also have subject matter experts from Grant Thornton, Karan Kakkar, who is a partner in tax planning and optimization, along with Sarthak Prashar, who is a director in Global People Solution. Before I hand over to Mr. Kharbanda to give his perspective and opening remarks, I just want to have some background to it. The scheme is a landmark step by the government to tackle unemployment and bring the informal workforce into formal secure jobs. It intensifies employers, empowers first-time employees, and shifts focus from welfare to active employment generation. To give us a deeper overview of the scheme, I would now like to have Mr. DPS Kharbanda to take us through his wisdom and knowledge. Over to you, Mr. Kharbanda.
Thank you. Good afternoon. First of all, I would like to convey good afternoon to Madam Richa Sharma. She's Director, Ministry of Labour Employment. Mr. Akhil Chandra.
Good afternoon, sir. Good afternoon.
Thank you, ma'am. Mr. Akhil Chandra, Moderator, Partner and Global People Solution Leader. Mr. Karan Kakkar, Partner. Mr. Sarthak Prashar ji, Director, Global People Solution. Esteemed guest from SIDBI and Mr. Padmanabhan ji, Partner, GT Bharat. First of all, I would like to convey special thanks to GT Bharat for this interactive webinar on Pradhan Mantri Viksit Bharat Rozgar Yojana. You know, it's a great day that GT Bharat has organized such a webinar. I wish it could have been a physical one, but let it be next time. You know, it's a wonderful scheme which needs more sharing. It's my privilege to share a few thoughts on the newly launched Prime Minister Viksit Bharat Rozgar Yojana, commonly we says PM-VBRY, and its potential to become a game changer for industrial growth and investment promotion across our states. You know, it's not merely labor oriented. Basically it stands on three pillars. So, you know, when the cabinet approves last in July 25 and operations beginning on 1st of August 25, the intent was crystal clear to generate formal jobs at scale, enhance employability, and widen the ambit of social security. These three objectives are interlinked, and together they create the backbone of sustainable industrial growth. So, you know, let me go its little background. even in the short operational span, the scheme has begun to demonstrate traction. UP has shown how quickly the scheme can be adopted. 94,000 new universal account number, that is 12-digit identification number issued, UN issued, and more than 2,100 establishments have already onboarded into EPFO. In Tamil Nadu also, early adoption by the textile sector has ensured that smaller units, many employing fewer than 50 workers, have started hiring formally to avail of employer incentives. Maharashtra is tapping this scheme in its auto component cluster. By linking the scheme to MSME in Pune, Aurangabad, the industry is beginning to see reduced attrition because employees now value their social security coverage. Like ma'am Richa Sharma, she'll be going into details because she's the main anchor. She's the pivotal. She's one of the. I think she must have initiated for this launching of the new scheme. She must be into the details. But let me tell that it is practical at the ground level. For example, say mechanics and leverage, which I am given this subject. Let us consider a small garment manufacturing unit, maybe at Ludhiana, maybe at any place. It's already having 80 workers, and they are planning to expand, hiring 20 more. Under this PM-VBRY scheme, for each new hire, the employer can receive 3,000 per month for up to 4 years. That is 36,000 rupee per worker annually. For 20 workers, the total incentive is 7.2 lakhs per year and nearly 29 lakhs for 4 years. Why I'm giving this example? Similarly, if each worker contributes an additional productivity worth 10,000 per month, the unit gains 24 lakh per year. When combined with the government incentive, the effective benefits exceeds 31 rupees lakh annually, a handsome margin that can be reinvested into machinery, training, or market expansion. So it means it's a great leverage for the investment. Similarly, for the employee, the story is equally strong. With up to 15,000 rupee as incentive, the financial literacy training and part of the incentive locked into savings, and each worker gains not only higher income but also a pathway to financial security. So this simple arithmetic illustrates how leveraging Pradhan Mantri Viksit Bharat Rozgar Yojana is not a subsidy mindset. It is an investment multiplier for both employer and employee. So that's why I have given this example. So employability and national outlook, India today has about 49% of employability among youth. As per recent skill assessments with PM-VBRY, my camera is hidden. Okay, is it okay now?
Yes, sir.
So India today has 49% employability as per recent skill assessments with PM-VBRY directly incentivizing formal hiring. Projections suggest that incremental 6 to 8% rise in formal sector employment over the next 2 years. So this could raise effective employability to around 55 to 57% by next 2027. That's a remarkable shift for a country of our demographic scale. So the implications are profound. Every percentage point gain in formal employability means millions of young Indians moving into structured, secured, and productive roles. For global investors, and it enlarges the skilled labor pool, making India an even stronger destination for manufacturing and services. So, to sum up, it's a strategic call to action. So it's a 3-pillar. First pillar is for industrialists and investors, which I have given an illustration. This is the right moment to scale. Even every new hire directly offsets your cost and strengthens your long-term competitiveness. I am addressing to industrial brothers also now, so they shouldn't take it say only a labor oriented. It's a industrialist and investor oriented also, as illustrated in my example. And second pillar is for workers. Formal jobs now come with social security, saving discipline, pathways to career growth. And third pillar is our policy makers. Our task is to ensure smooth implementation, awareness campaigns in industrial clusters, among industrial houses, among industrial unions, hand-holding through PF offices, and feedback system to troubleshoot issues in real time. So if these three pillars work in unison, I again say three pillars: the investors, industrialists, second the workers, and third the policymakers. If these three pillars work in unison, Prime Minister Viksit Bharat Rozgar Yojana will not just be an employment scheme, it will be the lever that positions India as a hub of resilient industries and a magnet for investment. So I won't take much time. So that was the main thing which I wanted to focus on, three pillars, and we have to work hard for making our economy as the fourth largest economy as dreamt by our Honorable Prime Minister of India. Thank you so much. Jai Hind.
Thank you, Mr. Kharbanda. I think such a insights and experience you've shared. I like your, statement that it's not a subsidy, it's a investment roadmap for the industrialists at large. Implications are multifold. Global investors, it will give a lot of impetus to global investors to think and make all the products, and our honorable Prime Minister has a dream of making everything in India. And then three-pillar approach. Thank you. Now, before going to Ms. Richa Sharma on the operational framework and listen more what the government has actually done and deep dive into this scheme further. As everyone is aware, that scheme has been structured with a clear operational framework covering applicability, registration timelines, incentive disbursements, Aadhaar-based verification, and robust governance. Government has been as clear this time with hardly any ambiguity. But as you know, every new scheme has a lot of questions coming from the industry at large, and obviously with this kind of clarity, you bring a lot of transparency, accountability, and smooth implementation across establishment. But still, our audience and wants to understand the framework in detail, and that's why I would like to invite you, Ms. Richa Sharma, to throw some light on this.
You want me to speak about the scheme first, or you would like to go through the slides and then I say something?
No, whatever way you want to follow the path, ma'am. It's. I think scheme overall people are aware about this, just to get an operational framework that how this is applicable, what are the period and everything, more details into it. Overall on the scheme first, yeah.
Okay. So, as already discussed during the context setting, the scheme is vision of our Honorable Prime Minister, uh, announced in the budget 23-24. Then we took around almost a year for a lot of stakeholder consultation to address the worries of the employer and the employee about the finer contours of the scheme, and then only the scheme was taken to the cabinet, which was cleared on 1st of July 2025. The scheme is for the employees and for the employers also, and as shown by the data, the scheme has really taken up. In the all past 1 month, around 19,180 employers have already registered for the scheme, and the scheme is, as we all know, employ more and more people, employ additional people, link them to EPFO and get incentivized. So that is an ELI for me. The scheme earlier name ELI stands, which I believe is this: you employ, you link, and then you get incentivized. Although this scheme is not only an employment generation scheme, as we know, there are multiple other objectives also of the scheme. We are aiming that more and more of our workforce becomes formalized through EPFO, as the scheme will be implemented through EPFO. The other part is the scheme guidelines and the scheme contours say that the incentive in both the scheme is in two parts, part A and part B, as we all know by now. Part A, employees incentive is also payable after 6 months of retention, and in part B, the employer's incentive is also eligible payable only after 6 months of retention of the additional employees and net hiring. So the scheme also aims at sustenance of the generated employment. Now, what sustenance will give to the employees? The sustenance will be like an on-job training for them. See, suppose an employee just remains with an employer for a couple of 1 or 2 months, they do not gain anything. Neither does the employer gains anything. That is the reason why the 6 months criteria was kept in the scheme, so that if the employee stays in an employment for 6 months, he learns, his employability increases, and his productivity increases. This is a win-win situation both for the employee as well as the employer. Then the first part of the scheme for the employee, for the second installment, also emphasizes on a financial literacy course. Although it's a very simple course, not of a very high nature, very small videos are there, but it aims at bringing that attitude in the newcomers or the first timers about learning something related to their own finances. So that is also one of the aims of the scheme. And this a major part of the scheme is going towards the employers. So the interest of the government is that you generate more and more employment, align with the other schemes of the government of India, like Make in India. The National Manufacturing Mission is also coming up. So employer side, it is not only that you are generating employment and only the employee is being incentivized. A lot of a bigger portion of the scheme's outlay is also going towards the employer. So these are the basic things, and the best part of this scheme is it is highly technical oriented. It is highly technical scheme. The technical in the sense, you are not required to fill any extra forms. Any extra compliance burden has been not given to the employee or the employer. The employee for first part only has to generate a UAN through FAT, which is available on the Umang app, and their bank account must be Aadhaar seeded. That is the only requirement from the employee. And the benefit, once the eligibility criteria is fulfilled, will directly flow into the bank account of the employee, which is Aadhaar seeded. In the part B of the scheme for the employers also, although we call it as registration, but if you must have gone through the process, you must have seen that there is no additional registration per se for the employers also. The only things we need from EPFO needs from the employers is their GST number, their PAN linked bank account number, their PAN number, and a consent that yes, I am ready to be a part of this scheme and I am ready to take incentive from Government of India. That is the only registration which has been asked from the employers. There no other calculation the employer has to do, no other calculation the employee has to do, no other extra bills they have to submit for getting the incentive. Everything will be taken care by the software which has been made for the scheme. The software will through your ECRs which you have, the only requirement we are asking from the employers is to submit, file your ECRs timely and correctly with all the data which is required, so that the system can very efficiently work out your incentive and provide it to you as per the scheme eligibility conditions and as per the scheme guidelines. So nothing much has to be done by the employer except lot of employment generation. The threshold for the second part of the scheme has also been kept very less. That is less than 50. If you are an employer with present baseline of less than 50, then only 2 additional employees. And if you are if your present strength is more than or equal to 50, then minimum 5 you have to generate. There is no criteria, no bar on the maximum side. only the minimum benchmark you have to reach of 2 and 5. There is no upper limit. As many as new employment you can generate, you are eligible to get the incentive. The incentive will not be paid on monthly basis, because the first condition of the scheme says that the employees have to be retained for a minimum period of 6 months. So the incentive will accrue if your employee stays for 6 months, and then at the end of the 6 monthly period, on a lump sum basis, it will be paid to the directly into the PAN linked bank account of the employer. So this time we have tried to make a very simple scheme with not much of a compliance burden for either the employees or the employers, and uh, incentive which and threshold which is not very difficult to achieve in these times. So this is more or less about the scheme. If anything else is there, any other questions are there, I can answer them one by one.
Thanks a lot, Ms. Sharma, for such an insights. And I tell you, the industry at large is very appreciative of the fact that government has not come out with any cumbersome forms and any additional requirements. It's very much integrated as a part of your daily PF compliances, as you rightly said. So there are certain KYC and hygiene which employer has to ensure to get, and that the benefit is also direct benefit, which is also commendable. Now I'll go to our speaker Karan Kakkar to take us, to incentives to the first time employees. Karan, your views before we come to certain questions which we have gathered, from audience at large.
Sure, thank you. I think ma'am has covered most of it. I'll not want to repeat for the sake of brevity. Just very, very finer, details. The period of the employment for such employees under Part A should be from 1st August 25. And any employee who's joining this any organization for the first time should be up till 31st of July 27. The maximum incentive what they can get is up to 15,000 or 1 month EPF wage, whichever is lower. And it will be paid in two installments. One is after 6 months. The ma'am explained the logic of 6 months.
Yeah.
And the second is after completion of 12 months. With the completion of financial literacy program, which the government is going to come out, the idea of the financial literacy program is for the employees, for them to understand how to manage their finances, how to do savings, because they are first time employees, they are first time getting some generating some salaries for them. And their future will be secured if they are financially literated. So that is probably the intent of the government also to give them this course. And after the course is done, it is directly coming to their bank accounts. They do not need to run pillar to post. It is directly seeded to their bank accounts after they are registered with EPFO, and they do not need to do anything. The employees who will do the filings for their EPF contributions for these employees will automatically get eligible for their incentive, which comes to their own individual bank account.
Thanks,
Uh,
Karan. Thanks. And I think before we move further, I have one question for you, Karan. How does the scheme determine that an employee is a first timer? Is there any separate verification mechanism implemented under the scheme, or will the checks be undertaken through UN or EPF registration data?
Yes, yes, Akhil, very, very, very important, question what you have touched upon. The first time employees have been defined under the scheme also. So it says for the first time who is coming into the scheme, joining the organization from 1st August 25 onwards till 31st of July 27. And for the first time, they are contributing to the EPFO. They must be working elsewhere, but if they were not contributing to the EPFO or did not have the UN number, they will still be considered to be a new joiners in that sense. But if those, similar set of employees who were earlier contributing to the EPFO but have, discontinued or were in the organization who have not probably contributed to the EPFO, and they have a UN generated, that is how the checks the government is also going to keep whether they are first time employees or not. So that is the definition in nutshell, what people should understand who are the first time employees. Maybe,
Right.
Richa ma'am, you want to, add something if I missed on this point. This is the intent. How do we identify? How is government wanting to identify the new time joiners?
Yes, absolutely right. Only the thing is, you should have joined the establishment which is claiming uh, against you in their, which is filing for you in their ECR after 1st of August and between 31st July 2027. And no contribution against that UN must have come earlier. That
Perfect.
UN may have been opened, because see, there are
Yes.
n number of cases where the UNs are open but no contribution has come till now. We have got cases where the UNs have been opened 5 years back also, 6 to 7 years back also, but no contribution was made. Somebody must have tried as a student, or they must have done for just for the sake of understanding what is this UN, because there are people like that. But if there has been no contribution received in EPFO and you join establishment between these two dates, then you are a first timer for us.
Perfect.
Because you
Understood.
see, as Karan said, he may be working somewhere but has joined EPFO or any exempted trust right now. So one of the aims and the objectives of the scheme is formalization also. It is employment generation, but formalization is also one of our aims. So the person must be working in some unorganized sector, but now he has come into the formal employment.
Great.
Thank you. Thank you. So that brings me to the next question, ma'am. People have this unclarity whether this benefit applicable for new joiners who are professionals like chartered accountant, company secretary as well.
Anyone who has got a gross salary not exceeding 1 lakh rupees.
Got it. Got it. And ma'am, by when can we expect the release of details regarding the employee's saving instrument, wherein the amount of second installment would be
Uh,
found?
just a few days more. Just a few days more.
Few days more. Okay.
Yeah.
Thank you. Thank you. Now let's move to the next part, Karan. Incentives to the employers. Can you quickly cover that as well
Sure.
before we come to our questions? Yeah.
Absolutely, absolutely. I think ma'am has covered. I'll just quickly, again take through everyone. So the eligibility is fairly simple. The employers will have to register themselves with EPFO. They need to, hire the employees who are eligible. Again, the criteria is gross wages should be up to 1 lakh per month, and these employees should be retained for 6 months. So they can be new joinees or they can be rejoinees also. So both kind of employees are covered. There is nothing that, okay, somebody has been working elsewhere or in the same organization and has left the organization and joined. Those employees are also covered if they are joining after 1st August 25 up till 31st of July 27. Minimum hiring requirement is 5, which is very modest, for the establishments above 50 employees currently. When I say currently, it will be 31st of July. That will be the baseline what needs to be calculated. And below, only 2 employees generation in the entire 2-year span where the employment base is less than 50 employees. So that is the kind of modest ask what the government has kept, which is really, really very easy to achieve. The incentive, what is available, it can be maximum up to 3,000 per month incentive of the EPF wage, which is contributed by the employer for that employee in that particular month. So there are slabs which you can see on the slides also. So the maximum bracket whose EPF wage is between 20,000 to 1 lakh rupees, the maximum the amount of incentive per month per employee is going to be given to the employers who is generating this employment is 3,000 rupees.
Got
So
it.
this is sector agnostic. It applies to manufacturing sector. It applies to non-manufacturing sector, service sector, anybody generating employment, whether there are companies who have even applied for state incentives where the similar employment generation incentives are given. This is going to be independent of that. So this is over and above, the incentive, unless until that state has, some other uh, rider that, okay, any other incentive may not be allowed, but this is a central government incentive. This is not having such embargo. So that is very, very important. And last thing, again, it is a direct linked incentive to the employers. The benefit is going to directly come after 6 months. Yes, sir.
Thanks. My question to you, ma'am, I think Karan summarized this, incentives to the employers uh, very well. I just come to that question that guidelines which were issued in August 25 clearly mentioned that detailed guidelines for calculation of incentive under Part B will be released or issued separately. The audience would like to understand by when they are expected to be released. Any
Most probably next week. Most
Okay.
probably next week.
Okay.
Even we are trying for this dashboard also for all the employers, which will be available in their EPFO portal login, so that they can see what is the status of their new hiring, whether they are eligible or not. That also we are trying
Wow.
to make it. It is already in the pipeline and towards uh, getting ready. We are just hoping we can also give that as soon as possible.
So, ma'am, on a lighter note, you're taking away an opportunity for consultant like us to
Yes.
build up those dashboards for the clients, huh?
Yes.
Because no, but that's pretty awesome. I
Just
think
trying to make everything transparent and accountable. That is the
oh
only
yes,
part.
yes, yeah. Truly, and second question that brings me to the next question that whenever the company is getting merged, there's amalgamation, etc. How will the eligibility criteria be calculated then, and will the benefits still continue to flow to the merge or new entity?
See, if the new entity uh, continues with the same PAN number through which it registered for this scheme, then it will. But if after the merger these legal things change, the PAN number changes, or some sort of these details change, and you get a new PF code, you uh, again register with EPFO, then everything starts from scratch for that entity.
Got it. Got it. That I think fairly summarized the question, answer to the question. Now let me go to the another speaker, Sarthak Prashar, who's with us. Sarthak, are you from a payroll management and staffing companies who've been giving employees at large, are they eligible for this benefit or just their principal employers?
So, Akhil, the scheme does not specifically mention payroll management or staffing companies. However, the scheme is designed in such a way that the incentive is targeted for the employers of record, that is, the employers who are actually hiring those employees and making those entries for those employees in their electronic cum challan, that is the ECRs, on a monthly basis.
Okay, understood. Um, thanks, everyone. Now let's move to the another part of very important part of the presentation. Uh, a circular was issued by Ministry on gross wages, and I think people wanted to understand more in detail and in depth before we come to the specific questions on that. Sarthak, over to you.
Thanks, Akhil. So, on this particular slide, the Ministry of Labor and Employment has clarified that incentives under this scheme are only applicable where the gross monthly wage of an employee does not exceed INR 1 lakh. Therefore, employers must report gross wages correctly in the ECR, since this is the basis of determining eligibility for the incentives. Gross wage is defined very broadly as it includes all emoluments, whether in cash or kind, as per the employment contract. This means salary components, allowances, bonuses, and even benefits like housing or car lease, if mentioned in the contract, are valued, that will be counted. Practically, this has two important implications. First, one-time payments like joining or retention bonus will be considered if they are part of the employment contract. Second, benefits in kind such as accommodation or meal coupons must also be included if their value is identifiable. So, in essence, the ministry wants employers to adopt a transparent reporting of wages, ensuring that there is no underreporting and that only genuine eligible employees and employers benefit from the scheme.
Okay. And uh, Sarthak, do you want to say something, or shall we come to the questions?
Akhil, yeah, because I would like Richa ma'am, because there are several questions that we are seeing in the chat box regarding the gross wages, which you can take up with Richa ma'am.
You want, or maybe we can take those questions later, but let's go with the flow of the presentation right now. So my question to you, Richa ma'am, as Sarthak, mentioned on the gross wages. So what does gross wages up to INR 1 lakh at the time of joining an establishment mean? And what if at a later point during that scheme period, the gross wage amount crosses 1 lakh threshold? Will the benefit still continue to accrue?
See, the EPF and MP Act, which gives us the definition of EPF wage, says EPF wage is basic plus DA plus retaining allowance, right? For
Yeah.
the gross wage and for the gross wage, we only go by what the employer declares in the ECR. And you all know much better than me that every employer and employee define with uh, between themselves as per their contracts what will be their gross wages and what will be its components. So it is for you and for the employer and the employee to decide what all will be part of the gross wages and what will not be, so that the employer has to declare on their own, and we have no method to cross verify it. So it is left, as Sarthak said, it is left to the diligence of the employer that you that you declare very clearly the gross wages on which you are hiring your employee. The thing is, on the first completed month, whatever is the joining gross wage, that only my system will be taking. Suppose you have hired me and my gross wage is 99,000 in the first completed month. So by the definition and the contours of the scheme, I am eligible. Now, after 2 months, you see my performance and you give me a raise of 3,000. So now my gross wage exceeds 1 lakh rupees. In that case also you will be eligible. So we system will be just checking the first completed month's gross wage, which will be declared by the employer in the ECR for the employee.
Understood. Understood. And that brings me
However, the reverse is not true. Suppose for the first completed month, my gross wage you declare as 1 lakh 3,000. And
okay.
in the subsequent months, you do not like my performance and it degrades. My gross wage has been cut and you give me now only 90,000. Then I
Okay.
do not become eligible for this scheme. Neither the employer becomes eligible. Only the first completed month of the joining will be used by the system to calculate the eligibility both for the employee and the employer.
Understood. Understood. And now, ma'am, just to take this discussion forward, you said that employer has to declare in the ECR and it's clearly defined, has been gross wages, which employer has been defined, declaring till date also. There's no ambiguity on that. But more than what we commit to our employees in the contractual arrangement, there are a lot of incentives like perquisites or performance-linked incentives which are given, housing facility, car benefits, and all. Will that be the part of these gross wages we are talking under the new ALS scheme, or that should not be a part of?
That is for you to decide, and the HR of the company to decide whether one-time incentives, one-time bonus, or some this type of perks should be taken as a part of gross wage or not.
Okay.
See, if you ask me, wages has to be something which is month on month basis. Maybe
Yeah.
somewhat less in 1 month, I get something extra, in another month, I may not get. But the broad component of wages will always be more or less same. If you are getting some sort of performance linked bonus or some sort of incentive, that the HR has to take a call.
Okay, understood, ma'am. I will not, though there are many questions which are coming, but I think in the interest of the time, we'll move forward to the next slide, which I will request Sarthak to take us through, the illustrations quickly, as we are left with 20 minutes and we have a lot of questions coming from the audience, which we have to take as well.
Sure, Akhil. So, to the audience, this slide explains how the baseline employee strength is determined, because we are discussing a lot about baseline on which the incentives will be calculated. So, this is crucial for calculating additional eligible employees under the scheme. The baseline specially represents the average workforce strength of an establishment. So, in case you see the case one, where the establishment has been in existence for more than 1 year, from 31st July 25. So in that particular month, the baseline will be calculated for the preceding 12 months starting 1st August, and whatsoever the outcome, the average comes in, that will be considered as the baseline for the incentives. So in the case one, you'll see though the employee strength is ranging from 20 to 100, but the baseline is coming as 60 because that's the average for the past 1 year. Similarly, there can be another case for the establishments which have started and registered themselves with the EPFO in the last 12 months. So in case two, we have seen a case where the establishment has taken the EPF number in November. So that takes us 540 is the total number of employees, and they have worked for 9 months. So the baseline then in that particular scenario becomes 60 as well. And maybe the government, the case three categories are those establishments will be registering themselves with the EPFO between the scheme period, that is 1st August 25 till 31st July 27. For them, the Ministry of Labor and Employment have fixed the baseline as 20.
Thanks, Sarthak, for explaining this in a simple way. Now I'll ask one question to Karan. Karan, how will the criteria for an employer as manufacturing to be decided, and how does an employer qualify as a business under manufacturing sector?
Okay, so the manufacturing unit has been borrowed. The definition of manufacturer has been borrowed from GST law, which says that any unit which is into processing a raw material and which results in a new product primarily is a manufacturer. This is what we also understand in the general parlance. Uh, However, while the definition is coming out of the manufacturing unit, I wanted to, ask Richa ma'am also that, what happens in a scenario where my GST registration, I am a manufacturer today, and tomorrow I start my service, business also alongside, or vice versa. I'm into services, but I start my unit within the same pan. Will I qualify as a manufacturer or as a service provider? Because the benefit will extend immediately to 2 years if I qualify as manufacturer. So, ma'am, maybe you want to address that.
I didn't get. You have got a GST number which is for manufacturing, right?
Yeah. So GST number currently, let's assume it is for a service entity, service provider.
Yes, and then
I, you know, I start a new unit, which is a manufacturing unit under the same company, same pan. So
okay.
how do I, say benefit is for 2 years or 4 years?
But in that case, the GST returns which you will be filing will be for the manufacturing unit,
It
because
will
that
be
has got some HSN code during the GST return filing.
no. GST returns are filed across India wherever you are doing the businesses from. So GST returns are not determinant of whether I'm a manufacturer or a service provider. It is just a compliance what I need to pay GST on. My
Yes.
business will drive what am I? Am I providing services or am I manufacturing goods? So my question was, if today I'm a service provider, I opt for this scheme, and after 3 months I open up a manufacturing unit. In
But under
that
the same
case,
pan. But
under
under
the
the
same
same
pan,
pan.
yes, I'm expanding my
Okay.
business under the same pan.
Okay.
So what happens in that case? Is that do we have any clarity, or maybe the government wants to think over it?
See, unless and until we have something to verify that yes, you are a manufacturing establishment, your incentive will not flow beyond 2 years. For this itself, because yes, we get there are ambiguities with GST, only GST and data also. We are trying to converge data from several other ministries also, and on that basis I think another just couple of weeks we'll get all the clarity, and then that can be addressed in the schemes FAQs also once again. Because
Great.
yes, there is a bit of gray area in terms of this thing.
Absolutely. Ma'am, another related question to that was, which I wanted to ask on behalf of the audiences, is that, for applying for the scheme, we will have to submit the GST certificate also in the EPFO portal. So, which GST registration certificate do the employer need to submit? Because there can be a scenario that that employer is having 10 GST registrations in 10 different states. So which one is going to be the one which is going to get submitted for this portal? Because this is PAN linked scheme and it is not GST number linked scheme. So is that also something the government will want to clarify later during next round of
Yes,
FAQs?
yes,
Okay,
yes. We'll do that. Yes.
great. Akhil, back to you.
Yeah. Before I hand over to Sarthak, one thing, I don't know whether Sarthak, whether you checked on this. Ma'am, what if the employer company is into manufacturing and service both?
Come again, sorry.
What if the company is into manufacturing and service both?
Yes, there are companies like this, but if they are under the same PAN, then we'll have to see. Because for this scheme, the employer is bound by the same PAN.
Correct.
Only one PAN we are considering, like under one PAN, all the establishments are tied together. Now, if they are having multiple entities with all this variation, like manufacturing also and services also, then we have to see this thing.
Understood. So Sarthak, we need your inputs on few of the guidelines, issued recently on incentives to the employers.
Sure. Thanks, Akhil. So, maybe some of the like manufacturing sector we have already discussed. Another important aspect is with respect to the new employee. What does the new employee mean? So, as per the scheme guidelines that are there on the public portal, a new employee is anyone who joins an establishment between 1st August 25 and 31st July 27. So, this can include both the first-time employees and the rejoinees. So when I say rejoinee, a rejoinee is someone who has previously contributed to the provident fund, whether directly through the EPFO or through an exempted PF trust, and is now joining the another covered establishment. So another one to say that both the establishments that are directly contributing to the EPFO and vis-a-vis to the through the private PF trust are also covered for this incentive under this scheme. The second is one is the eligible employees to check the eligibility. So to qualify as an eligible employee, two key conditions that apply is that at the time of joining, like ma'am also explained, their gross salary, gross wages, I should say, must be less than 1 lakh, and contributions under the EPF directly through the unexempted establishment or through the trust must be payable by both employer and employee for at least 6 months to avail this incentive. Only when both these criteria are met, the employee will be considered for the incentives under Part B of the scheme. Third is the completed wage month. So this becomes very important because there will be no partial months claims that will be provided under the scheme. So if an employee joins on or before 5th of a month, that month itself will be counted as the first completed wage month. And in case somebody is joining after 5th of the month, the subsequent month will be treated as the first completed wage month. So this ensures that there is integrity and there are no claims for partial payments for the incentives.
Got it. I think there are 45 questions. 43 questions are already answered. And ma'am also have given a lot of answers while we were doing this dialogue and conversation. With this, we can move to our next slide and conclude the session, I believe, because most of the things. Let me know. There's another question. Let me ask. Yeah, so I think this is also answered. There's a question by Ganesh Pradhan that is this incentive applicable for existing employees below 1 lakh gross month salary, as we are also accepting the rejoiners in this scheme. So from an employer side of it, benefit will be given, But from the employee side of it, as you said, the employee should have never contributed to the PF. That's a baseline. But I think from the employee side of it, the benefit should be given. That's the answer. I hope I've given the right answer, ma'am, on your behalf.
A rejoinee has to join an establishment during the scheme period.
Yeah,
See, whosoever is existing will not get.
obviously.
I mean, whosoever is already continuing in the establishment will not get. But yes, you were in one establishment X prior to the scheme. During the scheme period, you join another establishment and you are an additional employee in that establishment, then that employer will get on behalf of you.
Understood. Understood. I think there's no question which is unanswered,
So
and
I think there is one, Akhil, I'll just reiterate for ma'am. I think this is probably you want to take it up. There's one question, ma'am, coming that if the 1 lakh gross salary, gross wages includes, cash or kind. So does insurance policies, group insurances, etc., are also going to be part of it? Because they are never reflected on the ECRs, etc. So probably, ma'am, any thoughts on that?
They are not reflected in ECRs, but what do you do when you give their salary slips? Do you include it in their contracts? Do you include it?
The contract says that the anybody joins the organization is eligible under the group scheme.
Okay.
So that's about it. There is no, of course, the premium, etc., will be borne by the employer, and it is not passed on to the employee. This is what at least happens in our organization also. I'm talking about that.
So
yeah. So
see,
Richa ma'am,
that is the reason I said why the HRs have to come into this thing to answer. See, whatever you include as a part of the package, maybe then that you will. I'm assuming, because see, I'm from the government, so I can't tell this thing clearly. It will depend from the employer to employer. But this is just an observation that whatever you comes as a part of the contract with your employee uh, may become a part of the gross wages.
But that might not have the value always, as for the HR also to ascribe towards one employee,
Yeah,
at least on
I
such
get that.
scenarios.
I get
Yeah.
that. If it can be like marked, ki, okay, this is this much amount, and then over a period of 12 months, you dedicate that amount to the gross wages. I don't know. I mean, you need to take a call on that.
Any guidelines, etc., or around this are expected? More further
About gross
clarity
wage, about
yeah.
gross wages?
about
No,
gross wages.
no.
Okay.
The
Okay,
only
ma'am.
guidelines will be coming out is the calculation part and part B, and how the second installment will be provided. And since there are confusions about and a bit of ambiguity in the manufacturing, like how we will certify, because it needs to be very thorough, because we cannot go on taking claims from people saying that I'm a manufacturing and my system says no, they are not manufacturers. So only three issues on which we'll be coming out with the guidelines.
But ma'am, I think you should this issue which Karan and we've discussed on gross wages and the benefits to be part of this or not, because if we see the existing law under the EPFO and other schemes also, these incentives and one-time bonuses and whatever insurance and, benefits which companies are giving to the employees, they're never form part of this, wages for the purpose of PF for that matter. And similarly, gross wages, which we are talking about here. It would be better if government feels that there's some FAQs which should be released, because if you leave this to the establishment to decide, then there are chances that all the establishments will exclude this and just whatever coming in the payslip show this as a gross wages. So I think it will bring more clarity, because this is one of the main criteria to will the benefit of the scheme.
I get it, but the thing I said is it is very difficult to bring out anything very categorically in this terms, because it depends from employer to employer and from within an establishment also, between different categories of employees. So it will not be very easy, but okay, anyways, I'll take it back and discuss within our
Maybe.
ministry, and we'll see what can be done regarding this.
Maybe,
Perfect,
ma'am,
ma'am.
a suggestion.
Yeah.
If you know what the probably government can think, or you can take it back, is a negative list can be provided. Okay, this may not be covered. What is covered is
Okay.
on the companies to decide. What may not be covered, which otherwise it will lead to a lot of litigation later on at
Yeah.
the time of disbursements. After the disbursement happen, if the verification is done by EPFO officer and they find out, okay, you have not declared it properly because your understanding was this, our understanding is this, rather than making a simplified scheme, it will lead it to a lot of litigation. So a negative list can come out. That is also helpful for the industry.
No, don't worry. EPFO will not go back and check on this thing.
Okay.
I look after EPFO also, so that is my assurance. EPFO will not go back and check on this thing.
Sure, ma'am.
Perfect.
Sure.
Thank you. And I think before we conclude, I just want to tell as a way forward, because we have discussed so many things, and we really want, and even the government really want, industry at large to maximize the benefit under the scheme. So it's very important for organizations to start, doing an impact analysis of what what they're eligible to claim under, under the scheme, ensuring EPFO registrations, reviewing employment contracts, maintaining complete compliance records. This not only safeguards adherence to the scheme's requirements, but also builds confidence during, audit or verification if that happen. But ma'am said that that's not a intent. We want everything to be moved smoothly on this. At the same time, companies should also can align their hiring and expansion plans with the scheme timelines, enabling them to optimize incentives and achieve cost efficiency. Especially for the manufacturing sector, the extended 4-year benefit window provides a unique opportunity to scale operation, which Mr. Kharbanda also beautifully, stitched together each and every, how the benefit is coming to the employee, how this benefit is, getting multifold converted into another way of investments, and bring a lot of productivity for the organization and for the country at large. So we should be looking into all this and avail that benefit. And with this, I'll thank each and every panelist, Mr. Kharbanda, Richa ma'am, Karan and Sarthak, for the valuable time and inputs and discussion. And I think we will be surprised to see that we've got 50 questions when we were discussing, and the team behind has been answering all the questions. But before we conclude, we have 1 or 2 minutes left. Any concluding remarks by all the panelists, starting from Mr. Kharbanda to you, and then Karan and Sarthak? Mr. Kharbanda, you want to conclude before we wrap up the session? Ma'am, yeah, Mr. Kharbanda.
Am I audible?
Yeah, now you're audible, yes.
Let me congratulate the ministry and especially Madam Richa Sharma. The ministry has done a fabulous job, but it requires widespread, advertisement among the investors, among the domestic as well as international investors. If any industrialist wants to hire any employee, in absence of this scheme, he has to hire. But the industrialists should be thankful to Government of India. Okay, first time, such a beautiful scheme is there that after every employment, he will be get some incentive. Otherwise, government is not bound to give any incentive. But it's a great government is helping the industrialists, helping the employees also for creating employment generation. But at the same time, it enhances investment in the states, in the country also. Ultimately it raises our economy. That's what I am saying. It requires, I think, a little bit small videos from the ministry to invest India or invest Punjab or invest Haryana, invest Gujarat. All the investment promotion departments of the respective states. It requires much more publicizing of this scheme. Once again, congratulations to Ma'am Richa Sharma. Thank you so much.
Thanks, Mr. Kharbanda.
Thank you, sir. Yeah, thank you, sir. just for information of everyone, more than 10,000 outreach programs have already been conducted by the ministry, EPFO, CLC, all across states, union territories, each and every district we are reaching out, clusters we are reaching out. Through this forum, I would like to request all the employers to please uh, file your ECRs in time, because that is the must. You have to give us your credentials, whatever is asked for the registration under the scheme, the EPF, your PAN link bank account, your GST, your consent. But more than that, please file your ECRs in time. 1 month has already passed, ECRs have started coming in. We request that please encourage through your employer associations, through your employer friends, whatever groups you are having to file the ECRs in time, so that the system, by the time 6 months pass and the first tranche of incentives is ready to be disbursed, everything is well in place and robust, checked, and the incentives can flow very smoothly without any hassles and with minimum grievances.
Ma'am, if you allow me just one line, in simpler terms, a letter from ministry to organization like FICCI, PSD Chamber of Commerce, so that they should be fully aware that yes, this is the government scheme and this is meant for investors. It's a investor friendly as well as employee friendly also.
Sir, already we are conducting webinars, seminars with CII, ASSOCHAM, SFI, EFI, everywhere we are doing. There are cross-functional teams along with ministry, state representatives. This time we have roped in the states also. The state chief secretaries also, our secretary ma'am is taking up with them, already done that. We have got nodal officers from the ministry for each and every state. We are visiting the states, making the state machinery aware of this. And in that, we are together doing this with the industry.
Perfectly okay. Thank you so much.
Karan and Sarthak, concluding words from your side before we close the session.
No, first of all, thank you so much, ma'am. Thank you so much, sir, for your wisdom. Only one thing to the audiences, please do your eligibilities, do your filings, do your optional, selection of the scheme, which is on the EPF portal ASAP, because every month, we lose out the cash lying on the table, what the government is offering to you. So please do not miss that. I would have not done if I was the employer. So that's it from my side. Thank you so much. Sarthak, over to you.
Thank you, ma'am and sir, for the great insights, and to the audience as well. So from my side, what I think, it's not just about hiring, it's also about sustaining. So the focus should be on timely planning and registration, accurate monthly compliance, and continued employment.
Very well said, and thanks everyone for your time. And looking forward for this kind of interaction. And thanks again to the ministry and to the government. Obviously, the objective is not to just create an employment, as you said, ma'am. It's to formalize the workforce, to employ linked, and I think your words that you employ, you linked, and you incentivize. That's the baseline. And thank you once again for your time, and to the entire team who organized this such a engaging session. Thank you.
Thank you. Thank you, everyone.
Thank you.
Thank you.
Thank you.